I wanted to jump right into this and let's discuss raising capital. So as apartment syndicators, a major component of the business is raising money, raising capital. But apartment syndicators cannot be in the business of raising capital.
Right.
We're in the business of raising money. If you're in the business of raising money, you need to be licensed
That's
or
right.
you have to have other designations. Now, it seems a bit paradoxical. Can you walk us through the process, Dugan? Because one has to pool together capital, investors' capital,
Yeah.
to buy a large asset, but one can't be in the business of raising capital money. So how does that work, and what is the remedy?
Right. So when we're talking about pooling money, really what we're talking about is for anybody that's ever owned their own home. All right. So I've been blessed to have owned a number of homes throughout the 3 years with myself and my wife. And the bank or the title company, whoever's going to close on your house, says, here's the amount of money that you personally need to write a check to, right? Write a check to the bank to get the down payment so you get the loan to get the keys to your house. Well, when we're talking about apartment syndication, what we're really talking about is not just a single house. We're talking about large assets that potentially could be millions, if not tens of millions of dollars. So that down payment exponentially is much larger than what most people have in their own bank account or access to or in their own pocket. And so the process of pooling money is basically what we do is we're going to use other people's money. Those are passive investors, and we're going to provide a decent return for them. But it's that process of pooling their money to get the down payment, to get the keys to the asset, whether it's an apartment building or a commercial strip mall or whatever it is. It's that process. And what the SEC, the Securities and Exchange Commission, at least says in the United States, says, hey, if you're going to be in that business for somebody else, right? It's not your deal, it's somebody else's deal. And you're going to be raising capital with an expectation of receiving some sort of compensation, whether it's a part of the acquisition fee or the asset management fee, or even what we call the carried interest or the promote, the back end, if you will. You need to be a registered broker dealer. And the reason behind that is because if you're going to be selling securities, the SEC was created to protect unsuspecting investors from unscrupulous operators who are not telling them all of the truth, meaning all of the truth of the risks associated with investing. And so if you're going to be doing it for somebody else, right? Just like what Ava said, if you're doing it for somebody else, you have to be a registered broker dealer. But if it is your deal, if it's your deal and you're raising private capital for your own deal, then in large part, there are exemptions that allow you to not have to be a registered broker dealer, that you could raise capital because you're selling your own securities for purposes of the acquisition of that particular asset. So it is a distinction there, but it's important to understand that the policy behind why the SEC wants people to be registered is really for the protection of the passive investors, which we should all want. We want to make sure that all of our deals are always open, transparent, honest with the passive investors to make sure that they fully understand what the risks are associated with investing.